This crash was no accident. It was a calculated reset triggered by Trump and predicted by Buffett. While the world panicked, Buffett stacked billions. Today, I'll show you how to do the same. I'm going to expose the four-part strategy Trump used to accelerate a market correction. You'll see why Buffett is hoarding record levels of cash, the historical pattern that's repeating right now, and, most importantly, the exact playbook to not just survive, but profit from these economic resets. We'll cover Trump's tariff time bomb, his NATO gamble, the Fed pressure no one's talking about, and the chaos strategy reshaping global finance. If you want to position yourself like Buffett instead of getting wiped out like the masses, hit that like button and stick around. Because the bonus strategies at the end are ones even seasoned investors miss. Your support helps us protect more people from financial disaster. And remember, this isn't about politics. It's about understanding the strategies shaping your financial future, no matter who's in office. Before we dive into Trump's strategy, let me share something that will change how you see everything. Right now, America pays over $1 trillion per year just in interest on our national debt. $1 trillion. That's more than we spend on defense, education, and infrastructure combined. And here's the kicker. Every time interest rates go up by just 1%, that number jumps by hundreds of billions. So, what happens if someone deliberately crashes the economy to force rates back down? Suddenly, that trillion-dollar burden becomes manageable again. Trump isn't just playing politics. He's playing chess with the entire American economy. And the first move is already in motion. The four pillars of Trump's market reset. Let me break down exactly how this strategy works, piece by piece. Pillar 1. The tariff sledgehammer. Trump's tariff strategy isn't about protecting American jobs. It's about creating controlled economic chaos. Here's how it works. When you implement major tariff changes, three things typically happen. First, consumer prices often rise. Second, trading partners frequently retaliate. Third, global trade patterns can shift dramatically. We've seen this playbook before, and Buffett remembers it well. In 1930, the Smoot-Hawley Tariff Act created similar conditions. What started as trade protection contributed to a global economic downturn. Between 1929 and 1932, the stock market lost 90% of its value. Banks collapsed. Unemployment hit 25%. But here's what most people miss. Some investors positioned themselves brilliantly during that period. They accumulated assets at deeply discounted prices and profited massively during the recovery. Current trade tensions with China, Europe, and other partners aren't random market noise. They represent systematic changes that could create significant market opportunities for those who understand the patterns. Pillar 2. The NATO power play. While everyone's focused on trade wars, Trump's NATO strategy is the real masterstroke. By threatening to pull back from global military commitments, he's creating a geopolitical vacuum. And nature hates vacuums. When traditional power structures change, capital flows shift. Ukraine, Taiwan, Middle East tensions. These situations create both risks and opportunities. And periods of global tension historically drive money towards certain sectors. Buffett isn't naive about this. Berkshire Hathaway has maintained positions in defense and security-related companies. Not because he wants conflict, but because he understands how capital moves during uncertain times. Changes in international commitments serve multiple economic functions. They can reduce certain government expenses while creating market conditions that justify policy responses. It's a complex dynamic that creates both challenges and opportunities. Pillar 3. The Fed manipulation game. This is where the real complexity emerges. Major economic disruptions often force central bank responses. We've seen political pressure on Federal Reserve policies intensify recently. But consider the broader economic pressures. When unemployment rises or markets experience significant stress, the Fed traditionally responds with rate cuts. This pattern has repeated through multiple economic cycles. For investors positioned correctly, these monetary policy shifts can be incredibly profitable. When rates fall, borrowing costs decrease, asset prices often rise, and certain investment strategies become much more attractive. The key is recognizing that these aren't random events. They're predictable responses to economic pressure. And when that trillion-dollar government interest burden becomes unsustainable, policy responses become almost inevitable. Pillar 4. The chaos dividend. This is the piece that ties everything together. Trump doesn't just want economic change. He wants to rewrite the rules of how America operates. And the best time to rewrite rules is during a crisis. When markets are volatile and people are concerned, they often accept policies they'd normally question. The disruption becomes justification for new approaches. Think about 2008. The financial crisis enabled massive government intervention, industry restructuring, and monetary policies that seemed impossible before the crisis. Or 2020. The pandemic justified spending levels and business changes that would have been unthinkable previously. This pattern repeats throughout history. Create or capitalize on the crisis, then position yourself as the solution. Warren Buffett has lived through enough cycles to recognize this pattern. That's why he's holding more cash than ever before. He's not panicking. He's preparing for opportunities. The Buffett Survival Playbook. So, how do you protect yourself when this strategy unfolds? How do you turn Trump's market reset into your wealth-building opportunity? The answer is simpler than you think, but it requires discipline. Step 1. Build your cash castle. Before you do anything else, you need a defense. I'm talking about 6 months of expenses in cash. Not invested. Not in crypto. Not in stocks. Cold, hard cash sitting in a boring savings account. Why? Because when the crash hits, cash becomes king. While everyone else is forced to sell at the bottom, you'll have ammunition to buy. Step 2. The dollar cost averaging defense. Here's where most people get it wrong. They try to time the bottom of the crash. They wait for the perfect moment to invest. But nobody, not even Buffett, can predict exactly when markets will hit bottom. Instead, use dollar cost averaging. Set aside a fixed amount every 2 weeks, regardless of what the market is doing. When prices are high, you buy fewer shares. When prices crash, you buy more shares for the same money. Over time, you smooth out the volatility and position yourself for the recovery. Step 3. The diversification shield. Don't put all your eggs in one basket. When Trump's strategy unfolds, different assets will react differently. Defense stocks might soar as global tensions rise. Tech stocks might crash initially, then explode when rates get cut. Bonds could rally as investors flee to safety. Even crypto might benefit from dollar weakness. Spread your bets across multiple asset classes. You're not trying to hit a home run. You're trying to survive and prosper through whatever comes next. As promised, here are 2 advanced strategies that most investors completely miss during market resets. Bonus tip number 1. The dividend safety net. During crashes, companies that pay reliable dividends become incredibly valuable. Many keep paying dividends throughout the crisis, even if their stock prices drop. This gives you income while you wait for prices to recover. Look for companies with long histories of dividend payments. These dividend payments can be reinvested to buy more shares at crash prices, accelerating your wealth building. Bonus tip number 2. The contrarian currency play. When Trump's strategy creates dollar instability, other currencies might strengthen. This opens opportunities in international markets. Consider exchange-traded funds that invest in European or Asian markets. When the dollar weakens, these investments become more valuable in dollar terms. The question isn't whether Trump's market reset will happen. The pieces are already in motion. The question is whether you'll be ready to profit from it or become another casualty. If this breakdown helped you see what's really happening behind the headlines, smash that like button. And don't just walk away. Subscribe and turn on notifications because the next market shift won't wait, and neither should your financial game plan. Remember, simplify money, Muchafy Wealth. One smart decision at a time.